Hi and welcome to Swissquote's daily market talk and happy Nvidia earnings day, guys. It's Wednesday, November 20th. Nvidia will be releasing its quarterly results today after the bell. The expectations are sky high. The valuations are high as well. And investors are increasingly wondering about what could stop Nvidia's relentless rally. Will it be the rising competition? Will it be the slower AI spending from big technology companies? Will it be a delay in reportedly overheating Blackwell chips? Or will it be trade tensions under the new Trump administration? Or will Nvidia simply continue to champion the AI rally? Answer in a few hours. But first, yesterday was again a geopolitically tense day, and not due to the Middle East dispute, but the attention was back on Ukraine that fired its first US missile to Russia after having received the green light from the White House earlier this week following a 2-year wait to do so. And in response, Kremlin relaxed rules that would allow them to use nuclear weapons in case of an attack on its soil. So, yes, we saw a swift flight to safety at yesterday's trading session. Gold and US Treasuries gained, and crude oil was better bid. The barrel of US crude remained short of testing the $70 per barrel offers, however, as the geopolitically led rally yesterday brought some top sellers back to the market immediately, because the fact that most Western economies have already cut their exposure to Russian oil, and the weak demand outlook for China, which actually buys around half of the Russian oil today, keeps the oil bears in a dominant position below the $70 per barrel level, even with the rising geopolitical tensions in Ukraine. Now, in the equity space, the major indices in Europe were down and major US indices kicked off the day on a bad mood, but the geopolitical worries gradually left their place to optimism in the US after Walmart's rally to a fresh record high on stronger than expected sales and a strong outlook for the holiday season. And also on hope that Nvidia would do the same on another set of hopefully mind-blowing quarterly results today after the bell. So yes, ladies and gentlemen, one of the most anticipated days of the earnings season, if not the most anticipated day of the earnings season, the Nvidia's earnings day is finally here. Now, as you know, or as you imagine, the market expectations for the third quarter earnings are again sky high, because Nvidia is expected to have sold for $33 billion worth of chips last quarter. It's huge. It's 10% higher than the revenue that the company announced last quarter. It is more than 80% higher than the amount that they made during the same time last year, and that's more than 5 times the amount that they used to make before the AI craze began at the start of last year. So obviously the strong AI demand, particularly this insane demand for Nvidia's next generation Blackwell chips, as says the company CEO Jensen Huang, and the robust results from TSM that actually builds these Nvidia chips, hint that the Nvidia's results today will probably meet and hopefully beat these high market expectations. I mean, I would be really surprised if Jensen Huang came up there with just average results after having put fuel on fire, saying that the demand for his Blackwell chips is simply insane just a few weeks ago. So yes, and despite the news that these Blackwell chips have overheating issues, as it was reported earlier this week, there are reasons to believe that Nvidia will deliver today. Now, Nvidia closed yesterday's trading session at $147 per share level. That's a touch below its all-time high level, and will either extend its rally to a fresh all-time high or decline on some profit taking. I know everybody could say that, but here's the thing. It is quite hard for me to say today that good-looking results from Nvidia today will lead to a good market reaction after the results. Because remember, last quarter, the blowout results and a solid outlook weren't necessarily enough to boost the share price in the immediate aftermath of the earnings announcement. The reaction was more mixed. This is because investors have become increasingly harder to satisfy. Well, they've simply been just served incredible dose of earnings beat over the past few quarters, and they are today increasingly worried and concerned about what could go wrong with these Nvidia earnings in the foreseeable future. Now, Blackwell delays are the most obvious thing that could go wrong, obviously, but the company had successfully tamed worries regarding the Blackwell chip issues at last quarter's results, remember? And I believe that they will be doing pretty much the same thing this time around as well. They will simply play down the delays that they will say could happen for this type of technology releases and simply focus on the insanity of the demand for these chips. And well, long-term investors will probably focus on the company's capacity to meet this insane demand rather than the minor road bumps like overheating issues that should be okay in a few months. So if the company could convince its investors that they are making good progress to meet this insane demand for the Blackwell chips, the market reaction will likely be positive after the earnings. Now, other risks involve the rise in competition and a slower future demand for AI from the big technology companies that already invested big in AI and where investors are growing increasingly impatient to see the results that take time to show and raise questions about the size of these investments, the size of the returns compared to them, and well, when will they come up? But one thing is clear, the AI demand will not die out even if it slows. Capital continues to flow into AI startups, especially in the US. Many sectors out there, public or private, consider AI projects to improve their productivity levels and decrease their costs. And of course, the demand outside the big technology companies will be more granular, and the new AI customers from around the world will certainly be looking for maybe more affordable chips than the ones that Nvidia proposes. They're expensive and premium, but Nvidia has still this important card to play in hand right now, and it's called Blackwell. Yes, Blackwell is all about Blackwell, and the raw power of these Blackwell chips remains unmatched for now, and its price too, because some expect the company to ship up to 100,000 of these Blackwell chips in the current quarter, but they cost $70,000 per chip, so that would be a $7 million addition to the sales revenue if the companies that could afford them, well, buy them. Now, looking at the political risks, funnily, the expectation that the new Donald Trump administration could further revive the chip war with China is, well, not a major worry anymore. Simply because Nvidia has a significantly smaller exposure to China than it did before. In 2021, the company made around 25% of its revenue out of China. And last quarter, the revenue from China was no more than 12%. This being said, the tariffs beyond China could well become a major headache for the company, as Nvidia made almost 2/3 of its revenue from outside the US last quarter, and obviously a worldwide trade war could increase its costs and hit the company's revenues. And Bloomberg takes the opportunity to remind us all that the first round of Trump tariffs back in 2018 sent Nvidia 31% down. Now, of course, the AI boom of today is a safety net for Nvidia, as the alternatives to their super hyper powerful chips are not running down the streets, but still it is a risk that should be considered by investors in the foreseeable future. But anyway, the implied volatility for Nvidia shares based on the at-the-money options pricing stood at approximately 58% for a 30-day period as of November 18th at the start of this week, hinting at a potential move of approximately 8 to 10% in the share price in the immediate aftermath of the earnings announcement. So that implies a potential move of around 1 to 2% in the S&P 500 altogether, to the upside or to the downside. So let's place our bets and see what happens. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below, as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow after NVIDIA's earnings. And until then, good day trading.